I can't do it.
Okay.
We'll do it live.
Okay. No.
We'll do it live. Fuck it. Do it live. I'll write it and we'll do it live.
Right.
Fucking thing sucks.
In 5, 4, 3.
Anyone claiming that America's economy is in decline is peddling fiction.
I've abandoned free market principles to save the free market system.
But we have to pass the bill so that you can find out what is in it.
Raising the debt ceilings does not increase our debt. It does not somehow promote profligacy.
I know words. I have the best words. Nobody knows the system better than me, which is why I alone can fix it.
Hey, what's going on, everybody? That's weird. The music just kind of cut out. Wait. Oh, there, I can hear it again. All right. That screwed up the timing a little bit, but we're back. Just a quick update. I did a couple more trades today for the F.I.R.E Portfolio. So I was just going to go over those with you all fine folks on Friday, show you what's happening. This is what you see on the screen here is everything I've done so far. It's the whole portfolio. So if you notice, there are a couple new things on there in addition to our Amazon call that we did yesterday and the puts that we sold on Ford and HYMC, and then the call we did on the Russell 1000. You'll see some NVIDIA calls down here, and then you'll see Grab calls as well. So I did two more options. And I actually thought about just buying the Grab straight out because it is a cheaper stock. Let's start with that one. Let me pull that up real quick on my chart here. Grab, for anybody that doesn't know, is sort of like the Uber of Asia. These were, I just got back from Asia, so I got very familiar with Grab, and it literally is exactly like Uber. They do food delivery. They do, actual deliveries of things if you want to send something to somebody, and then they give you cab rides. And there is no Uber in a lot of these countries, like Vietnam. I don't think Thailand has it. In Japan, Japan had Uber, and I think I used Uber over Grab. But a lot of these Asian countries are using Grab as their means of transportation. So here's pull up the chart first. Let's go through that, and then we'll go over the trade, and then we'll move on to NVIDIA. So here's the full portfolio as you on your screen right now. We can just kind of broad strokes go over where we're at. Pull that up. So our options buying power, I'll explain this in a little bit, but we're down to about 3,000. Our sweep has 11,397 in it. Funds available for trading, about 3,000. Our daily profit today made about 160 bucks total. We're up 2.5%, and for the year so far, the last 2 days made about 350. And okay, so let's stop sharing this and start sharing this guy. Here we go. All right, let me pull this up here. So you guys should be able to see this now. This is a daily chart of Grab, and you can actually see that we printed one of my buy signals down here on the close of this candle. Basically, I'll explain what this is. And it's actually performed pretty well as an indicator. So it's basically this pattern that you're seeing right here, where you have a low, you have a high, and then you have a lower low. That's what the double L stands for, lower low. So that's sort of the pattern, the first part of the pattern, the ABC. The D is when this high gets broken to the upside. That will print a buy signal. And this green zone here is just from the bottom of the top closing green candle to the top of the highest closing green candle. That's what this zone is. So as soon as we print above this high and close above it, it creates this buy zone here. You see, we got a really nice reaction on Monday. I actually didn't see this. It's kind of hard to scan every stock, and I actually wasn't really. I almost forgot about this, and I was kind of going through my my watch list last night, and I was like, oh yeah, grab. And I looked at the chart, and I thought the chart looked pretty good. And then yeah, we got a buy signal on the daily, and then this candle here, I really like. This is what you want to see if you're bullish. We opened at 390. And this is during the day. We came all the way down. We just tapped the top of that buy zone, dipped down into this inefficiency right here. So this is, we actually I call this a unicorn setup, and that's not my term. But we have this is called a breaker block. This is a breaker block, the thing that's drawn out in green. This is a breaker, a bullish breaker, this low, high, lower low, and then a break to the upside. And we have an inefficiency in here that I will draw for you. And if none of this is making sense to you, don't really worry about it. This is not something you need to concern yourself with. But there's the inefficiency there, and it's kind of hard to see it because I got the other thing on there. But we dipped down into, we wicked down into it, didn't touch the midpoint, left that open, and then immediately got a nice reaction up. And it chopped around a little bit, but we never traded back to the midpoint of this long wick. We never got down to the midpoint, which would have been right here at 375. Didn't get there. And then today we had some pretty nice price action as well, which I would have liked to get the bottom of this. I was a little late to this trade today, unfortunately. But this is, again, a really bullish daily candle here, right? They tried to drive price down. Couldn't even take out yesterday's opening price. So traded down to that, but not all the way through it. And then we got a really nice reaction back up. And we have some relative equal highs here. And then here's the rest of the chart that you can see. So it's pulled back quite a bit from these highs back in September of last year at about 650, got up there, and it looks like we've put in a nice little reversal pattern here. That's what the breaker is. The breaker is a reversal. So we've broken this trend to the downside, and we've closed convincingly above it. So this looks like a decent breakout to me. If I draw this down there, right? There's your trend line. Okay. And we've now broken above. God, this delay is killing me. We've broken above this convincingly, closed above it, and we've used this breaker block as support. And hopefully we're going to use it as support to launch it towards new highs. Okay. So from a technical perspective, short-term technical, this looks pretty good. I'm not sure if this will be a long-term trade or a short-term trade. I haven't really decided yet. This may be a quick one. If we get a really nice move over the next few days, and we have a nice profit, I'll probably take part of the position off and maybe just let the rest of it run. Put a stop in at our break-even point and let the rest of it run. Okay, but here's what the rest of the chart looks like. And this is pretty typical for IPOs. It looks like they IPO'd back in 2021. So you get that initial spike, right? And then after the lockout period, which is you know, from December 20 to, you know, November, basically December of 2021. So about a year later, I'm guessing all the insiders here sold out at like 16, you know, and that drove this down and to $2.29. And then it chops around here for years, for what, almost 3 years it was down there, just kind of trading in this range. And then we broke out of it in late October of 2024. We finally broke above this. Let me draw a little box around this so you guys can see it. Okay. We broke above that. And then it started acting kind of as support, at least for a little bit. You know, we had a little bit of a breakdown here, but still, even like the midpoint of that, we didn't get to it. We got a nice reaction off of it. And then just recently we broke down below it. But again, look where our reversal took place. It's like, okay, maybe I didn't draw this in perfectly. If I draw it in perfectly, all right, okay. It's hard with this lag. I apologize for that. Okay. So again, we didn't quite trade to the midpoint, but we got a reversal in the upper half of this zone. Again, this all just looks very good to me from a technical perspective. And I like the company. I mean, I used it like crazy. It is literally just like Uber. So hopefully this is a pretty good entry here. From a technical perspective, it looks good. I like the company overall. They are making money. They just had, so they had these two earnings misses in July and was that August? No, September of 2025. But they weren't big misses, right? And they're actually a profitable company. And then here you can see that they've basically tripled their earnings from last year. So their earnings, they're reporting, 3 cents a share, and back here they were at 1 cent a share. Here's the little headline: Q1 2026 delivered 24% revenue growth, record profitability, robust segment expansion. Like, I think this is really starting to take off in Asia. So I'm pretty bullish on this company, and from a technical perspective, it all looks pretty good to me. So I almost just bought this straight up in the account because it's only $4 a share. We could actually afford to kind of do that, but I figured, what the hell? Let's play it with some options. Use the leverage to our advantage. And so what did I think I got 2 contracts. Yeah, I bought 2 at 159. So, oh, by the way, I forgot to mention, we'll go over it. I'll pull up the here. Let's pull up the options chain for this, the way I like to read it. So I forgot to mention something pretty important when you guys are executing options trades. In terms of execution, you really want to use limit orders always. You don't want to just use a market order. You're going to get killed on the spread. You're going to get the worst possible fill. So, and I'll show you kind of what I mean here. So here's the options chains, right? We were looking at calls, and there actually aren't that many strike. Like, you can go far out. You can go all the way out to December of 2028. But look, there aren't very many. Even if you pull up all the strike prices, there aren't that many strike prices. It only goes up to $8, I think, $7 in December of 2028. So the way I played this and the way the options changes looked to me at the time, I didn't want to be super aggressive with this one. I didn't think that was necessary to buy something that was like really far out of the money and hope that there's a huge move. I don't know how long this is going to take to play out. I don't have a good feel for that. But the signal is on the daily chart. So if that does pan out, it should be relatively quick. But I gave it quite a bit of room to breathe. Let me just double check the trade here, because yeah, I played a lot. Yeah, so I took the longest the longest settlement. So, and I did it at the $4 calls. So here's what I bought. December 2028, the $4 calls. So just out of the money. I didn't go up to 7. I didn't think that level of risk was worth it for the savings. It's just, and this price has changed a little bit. We got it for about 160 at last trade there. We got it for 159. So we bought 2 contracts. Each one is 100 shares, so it's $159 for each contract multiplied by 2. That's what we spent on the trade. And yeah, I just didn't see the move from 4 to 7 is a big one. Granted, it has almost 900 days to play out. Okay, I'm giving it a lot of time to breathe. But I just did, and this is, like I said, it was a lot cheaper. It was 6 cents cheaper than it is showing right here. But yeah, I just didn't think that was really worth it. And I looked at some other strike prices, like the January, and this was very tempting. And I still might do something like this. I haven't been watching this stock long enough. So, and I do think that this next leg up might be kind of quick. We probably don't need to give it a year and a half to play out. But this could be a decent long-term holding for this account. So we might end up exercising these options and just taking control of the shares. If they're above $4 near expiration or any time between now and December 2028, depending on the what we have in the account and everything. But so when you're executing these trades, by the way, what you want to do is, because here's your bid and your ask, right? 151 and 170. Now, for like a small trade like this, I guess it's really not going to make a huge difference to your bottom line. But every penny does count. Okay, so when you select this, okay, we're going to go up here. So you would buy to open. Okay, so we are buying these calls. So you're buying to open. You put the number of contracts that you want. We'll just do 1 for this example. Here's your bid. Here's your ask. Here's like the midpoint between these two. And this is where you're most like you can probably get filled right around here. Now, if you want to be a little more aggressive, you can try to get something closer to the bid and hope that it pulls back and fills you. Or if if you just want to get into the trade, then just do it near the ask if you don't care. But the last thing you want to do is, when you're filling out this this ticket here, is change this order type to a market. Do not want to do a market order ever with options, because you're going to get the worst fill. You'll probably get something above 170. As opposed to doing a limit order. And the difference between that is, if you go down and you say, okay, I want it at 160, it's only going to fill you at or below 160. If it doesn't get there, maybe the trade runs away without you, but you're getting, you're saving 10 cents a contract, which is, again, everything's multiplied by 100 here. So feel free to do that math on your own. But yeah, you always want to use limit orders so you get the best fill possible. And one of the reasons why I like Schwab is you do get pretty good order flow. They're not selling your order flow. Like, they're not Robinhood selling your order flow to fucking, hedge funds who are going to front run the order and give you a bad fill and collect the difference on the spread or something, whatever kind of shenanigans they're up to. And then the timing, if you want it just for the day, you'd select this, or you can do good till cancel, and you can put a date in here. So you just you could set this and kind of forget it. And you can pick, okay, if between now and February 1st, it ever gets down below 160 a share, I want to buy it. I want to buy however many contracts you want. As you can see, yeah. So there's that one. That's the business on that trade. The other trade that we did was one that I had for all the hype around, like I'm not a big tech investor, but Nvidia caught my eye. I've been keeping an eye on it. Like I said, I haven't been in this personally. I missed out on the whole Nvidia wave and the sorry, what am I getting confused with my tabs here? Oh shit, my face is in the way. I keep trying to find a place to put my, I guess I was just blocking some of the Greeks that you don't really need. Okay, so that looks good. Let's remove that one and we'll pull up the chart for Nvidia and show you what I'm looking at on that one. Why I finally decided to dip my toe into this is for a couple of reasons. Let's see, where is it? Yeah, I have too many stocks in here. I really got to clean this up. Okay, so here's the chart for Nvidia. This is the daily chart. You can see we're pretty much near all-time highs, and you see this massive run that it's had from 2023 up to now. We were, in as late as May of 2023, it was a $30 stock or below. It's trading in the teens in 2022. And then for 2023 to 2024, all of 2023 was about a $45 stock, something like that. And then it just took off. And now it's trading around $210 a share. Okay, how much time I got? Okay, I got about 20 minutes before we're going to do a podcast here. I'm going to try to squeeze this in. Should be fine. So again, what I'm looking at, I did get another. So we hit these new all-time highs back in October of last year, pulled back, consolidated a little bit. We swept these lows. We just wicked below them. I don't think we got below this one, did we? Let's see. 164.07. 164.27. Not quite. Okay, but you can see our breaker that we put in here. We have a low, a high, a lower low, and we broke that structure to the upside. We broke above these relatively equal highs here. And now all of this previous resistance at this level, about 200, a little below 200. You see, once we broke above it briefly, and then we broke below it, and it's just, we've been bumping our head up against it since October of maybe November of 2025, right? Bumping our head up against it. We finally broke through it in April. And now it looks to be acting as support. We got a nice reaction off of it here in May, and we took it to new all-time highs. And we just pulled back into this previous resistance, which is now support, near our breaker buy zone. Okay. And we got another nice reaction off of that. And again, if you want to draw a trend line on here, we've kind of broken through this trend, and we're about to close decisively above it. So I think we're getting a nice little breakout here. We took out this swing high at 200 decisively. And if we zoom in on that, okay, we didn't quite form a breaker here because we didn't get the lower low, but we put in a swing high right at 200, and then we just dusted through it on Tuesday. And then on Wednesday, it was on Wednesday. Yeah. Yesterday we came down, we traded down into that swing high, which is again, support, acting as support. We got a nice reaction off of it. And then today we took off. Okay. So, again, I didn't get super aggressive with the options that I bought on this one either. I think I took the 240 strike price, which is just slightly above our all-time high. Okay, but that's what I was looking at from a technical perspective. And I think this has a lot of room to run. If you draw some fib extensions, if we go from swing low to swing high. God, this lag is brutal. Apologize. It's probably driving me crazy, more crazy than you guys. All right. So our 127 extension is at 256. That's usually where I one level where I like to take profits. And here's the 1618 at 280. So if I wanted to be a little more speculative and try to get, you know, if I was, I'm considering this as a more longer term holdings for the portfolio. I'm going to treat this the same way I'm going to treat that Amazon trade that we did yesterday. If this was going to be speculative, I probably would have gone up to the 300 calls and use that as some sort of target. But as it is now, we did the 240 calls, and I actually ended up buying two. Yeah, the 240 calls, January of 2028. Okay. And I ended up accidentally buying two of these somehow. So, I'm still not exactly sure how I did that. I was only planning on buying one. And I you know, I was clicking on it. Like usually when you click on it, it pulls up like a trade ticket or something. And it wasn't doing that. And of course, and so I'm getting frustrated. I clicked on it like a million times, nothing happened. And then I right clicked on it, selected buy, and went through and filled out a ticket. So I'm guessing all that clicking duplicated the trade somehow. But I ended up with two contracts when all was said and done. And here, I'll go to the options. Oh, let me share it. Yeah, share the screen. Options chain for NVIDIA. Okay, so NVIDIA, we did the January 21st. Okay. Can we get these things here? Okay. God, this lag is brutal. Okay. Jan 21, 2028. I did the 240 calls. So you can see them right here. And we got them for, chased this one a little bit in this account. I got it for 37.40, I think. Yeah, 37.42 was the fill on it. Did two separate trades, so that's the average of the two. So we're up a little bit on the position already because it had a really nice close in the afternoon. Well, a nice move in the afternoon. We haven't closed yet, but this is the trade here. Remember, if you are executing options, use limit orders. This is, you can see the delta here is a 53. So the market's pricing in a 50% chance this is going to be above 240 by expiration. I feel pretty comfortable with this level and NVIDIA. Oh, the other reason why I wanted to dip my toe into this is I wanted to show you something on this because one of the reasons I've been staying away from a lot of these tech stocks and NVIDIA was the insane valuations that they wanted to buy these companies. It was too much. It was too rich for my blood. Okay. So I'm going to close this. I think we're done with it. Let me go back to the chart real quick and just show you some of the things with this stock here. Okay. This was one of the deciding factors right here. I like the technicals that we just went over. The technicals look pretty good to me. From a long-term perspective, I like this price to earnings ratio at 31. Priced a 31 PE ratio for a tech stock is insanely low. I think this was probably up around, like, historically around like 60 on the trailing 12. TTM stands for trailing 12 months. So it does pay a dividend too if you end up holding it. Not much of one, but a little bit of a dividend. And so it just looks very cheap right now from an earnings perspective. A lot cheaper than I've ever seen it. And I mean, even if you do the math on this at $240 a share with today's earnings, it's still only like a 37 or a 38 PE, I think. So it's still like, even if it was at 240, I still think it would be a pretty decent bargain here. Even if you're not totally convinced that all of the earnings that these tech companies are coming up with are on the level, this is trading like a value stock right now. So I think it's a pretty good time if you do want to get into NVIDIA at a PE ratio of 31 is a pretty good time to do it. That is, I think historically it's been around 60. So it's kind of going on sale right now based on their earnings, even though it's $210 a share, based on, how much they're earning and everything. It's cheaper than ever before. Maybe not ever before, but it's the cheapest I've seen it in a long time. So I should have done this trade when I did the Amazon trade as well. It would have been nice to get into this yesterday or the day before, even like right at 200 would have been really nice. Let's take a look at the weekly chart real quick. Let's see what that looks like. Yeah, again, weekly chart looks good. We got the same buy signal on the weekly. Here's our low, our high, our lower low, broke to the upside, came back down, tapped against it, got a nice reaction off of it to the upside. And again, all of this previous resistance is now support. This is a nice level of support right at like 192, 193, something like that. Right around 190. I'll call it 190. It should have a hard time breaking below 190. If it does, look out below. If this reverses and we get a convincing close below 190, at least in the short term, you're gonna have a pretty strong move to the downside, most likely, from a technical perspective. But anyway, that's what I was thinking and what I just did for the portfolio. So we'll keep an eye on that. And I'm going to wrap here because we're going live with the podcast in about 10 minutes. So, yeah. Thanks for listening. Remember, this is not a signal service. If you are, I don't recommend that you copy my trades. I'm just trying to teach you how this is kind of done. The strategies we use, the techniques we use to get entries, to get exits, to hopefully make some money. But this is not supposed to be a signal service, even though I am giving you the trades that I execute. So by the way, like, I didn't realize that this did 2 contracts until later, because I wasn't really paying, because this is a simulated account. I don't pay as much attention to it as I would real money. If it was an issue, I would get out. You can close out of this trade right now and you'd actually make some money. We're up $210 on it right now. So if that was going to be like a super over allocation, I mean, yeah, it's about $7,000 worth of, 7,500 of our account, whatever. We can kind of afford it at this point. It's a big allocation to one stock, but over time, by the time this option is coming up on expiration, if we hold it that long, which I'm actually planning on this being a longer term holdings for the account. And we're going to sell some covered calls against it. We're going to do the poor man covered call on this one as well. I think it'll balance out nicely, but if it was a problem, you can close it out right now. If you should probably close it out immediately if you buy more than you want to, or you make a mistake like that. But if we were over allocated, we still have plenty of cash in the account. Got about 11K to play around with. So we should be able to afford all of our puts and everything. But with the puts and everything we've bought, we only got about $3,000 available for actual trades before we would go on margin. But actually the margin wouldn't really kick in until the puts were assigned, which is, we can kind of go through that as it happens. But yeah, you got to be careful. Make sure you buy the right number of contracts. I think I just must have been clicking like a maniac, getting frustrated, and somehow it duplicated the order. I think that's more likely than me selecting 2 contracts and reading through it and not realizing that I'm buying 2 contracts. So, yep. But make sure you become, that's why we do this. You should practice in like some sort of paper trading thing before you start going live, and make sure that you always check your orders before you execute. So until next time, guys, stay tuned. There will be more to come, and you know what to do. Just keep on peddling that so-called fiction. Peace.